Hello, everyone, and welcome to another great webinar from CPAacademy.org. My name is Jasmine. I'm so happy you have decided to spend the next hour with us. I've got a great presentation coming to you from Sachin Sharma. He is, of course, the CEO and founder of ProcureDesk. You should see him using his webcam right now. I'll turn things over in just a moment. He's here to talk to you about how to move beyond AP automation. That's unlocking higher margins for CPA firms. This webinar is, of course, being brought to you by ProcureDesk, and I'm looking forward to turning things over in just a moment. But before we get started, I want to make sure everything's working for our audience. We've got a big group here today. And if you could just help me with a quick audio visual check going over to that Q&A panel on the right side of your screen. Type me a message there to let me know you can hear my voice. You can see that title slide. You can see Sachin and I using our webcams for the time being. If you don't mind, just to help get the conversation started, go ahead and let me know that things are working and what are some of the challenges you face with AP automation. We'd like to know your thoughts and what is your experience with this topic. And also, of course, if you came with any specific questions, go ahead and drop them over there in that Q&A panel. That's a great way, like I said, to get the conversation started. Let us know our technology is working. And I do want to just remind you all that we encourage your questions and comments throughout the webinar. We'll actually do our best to try to save time at the end for Q&A. And I encourage you to put all your questions, your thoughts, your engagement, your feedback right there in that Q&A panel. If you happen to leave the webinar with any unanswered questions, don't worry, because I will be sure to share a full report of all questions asked with the ProcureDesk team once we wrap up today. And you'll also have contact information so that you can follow up at any point in the future as necessary. I'm checking on our audience right now, seeing all looks good. We've got New York working well, Cleveland, good afternoon, good stuff. I can hear. Awesome. Well, thank you so much to those of you who have let us know over there in the Q&A that everything's working. Again, continue submitting your questions as we go throughout today's webinar. I did want to let you know about credit for today's course. This is a 1-hour course, qualifies for 1 CPE. In order to earn that credit, we need you to do 2 things. Stay logged in for 50 minutes total and respond to our poll questions. We will be announcing and launching 4 polls today. And for the best experience, I recommend you answer as many polls as you can and as quickly as possible. We are recording today's session, and that archive, as well as your CPE certificate, will be available in your CPAacademy.org account within 24 to 48 business hours. For now, go ahead and grab a copy of your presentation materials, which you can download right now from the control panel's handouts tab. With that, I do believe we are all set, so I'll turn things over now. Sachin, our attendees are ready, and the floor is all yours.
All right. Awesome, Jasmine. Thank you so much. Good morning, good afternoon, good evening, depending on where you're joining from. Appreciate you spending this time with me today, and look forward to kind of making good use of your time. I see, cities all over New York, Raleigh, Columbus, Cleveland. I'm here in Cincinnati, so native Ohioan. But look forward to kind of walking you through this here. So let's get rolling with this. We have 50 minutes of presentation for you, and then 10 minutes we'll do Q&A, but I wanted to start with high level. What are we going to cover today? So we'll start first with, when we say advisory service, what does that mean, right? So where you are probably absorbing unpaid work today. So if you're doing bookkeeping or processing invoices and things like that, what are the things where you keep on doing the work because clients are paying you on a fixed fee basis and you observe a lot of work, which is the unpaid work. We'll talk about a framework where how you assess whether your clients are, like, what's the maturity level of your clients are when it comes to spend management or overall spend control. And how do you package that into an advisory service based on that maturity model? So this is I would say this is not just a presentation of this is what you should do. We're going to give you a framework that you can leverage to evaluate your clients' needs based on where they are in their spend management maturity journey and what kind of advisory services they might need. I'm going to share plenty of examples in terms of how you can kind of build that and what kind of rate you can charge and things like that. and we'll then talk about a live walkthrough of what a system like how ProcureDesk can help you do that. So we'll give you like a 10 minutes quick walkthrough, and then we'll end with a next steps and a Q&A. We have also put together a free assessment for you that you can work with directly with your your clients. It's a quick 10 minutes question and answer, and it just prints a report out which kind of helps you understand where they are in their maturity model. So all this is kind of pretty much done for you. So super excited to kind of walk you through this. Now, before we kind of get started, I just wanted to do this little bit of housekeeping items, just to make sure you are in the right room. So who is this session for, right? And what are you going to cover? So after this session, you will be able to diagnose really each client needs when it comes to spend control based on a maturity model, a quick 10 minutes survey, and you can figure that out, right? Identify which clients are ready for a billable control advisory service, and what are the 3 tiers of advisory services, how you can design that. And we'll also hand you a 90-day implementation plan that you can take forward from. So of course, this covers CPE credits, so I just wanted to kind of mention it there. All right. So before we jump in, if you're wondering why the hell I should listen to this guy, so I just wanted to kind of give you a little bit of overview on who I am and why we started ProcureDesk. So as Jasmine said, I'm the founder and CEO of ProcureDesk. And what we do is we basically automate procurement and AP for growing companies. I have around 2+ decades of experience in this space, both as a practitioner, like running AP teams internally, or procurement teams, or consulting organization on best practices, and automating a lot of these processes for small to large clients. Right? Some include Fortune 500 clients. Now, why we built ProcureDesk comes from pretty much solving for my own need. So when I was a practitioner running procurement and AP, we had a homegrown system, a lot of inefficiencies in the process, right? And you never have like $1 million sitting on the side, which you can just use that to implement a tool like ProcureDesk at a larger scale. And so we wanted to kind of have a tool, or at that time, I wanted a tool that is easy to use and doesn't break the bank. That's why we kind of built ProcureDesk, is to help growing companies set up controls around procurement and AP without investing a lot of money into the process. And our mission here is to help CPA and CAS practitioners turn the reactive AP cleanup work they do into a billable, margin-based advisory service. I would love to connect with you on LinkedIn. There's a link in the presentation deck. If you click on it, it'll take you to my profile, and we'd love to continue this journey on our discussion on LinkedIn. With that, let's jump in. All right. So what are you going to get the most from this session? Just to make sure, again, you're in the right room. So if this session is for you if you are managing day-to-day finance for clients between 50 to 500 employees. Your clients are using systems like QuickBooks or Xero or Sage Intacct, NetSuite, or similar. You're building or expanding a CAS practice, so you want to kind of take it to the next level. And you're probably absorbing a lot of AP cleanup work, which you don't fully bill for, right? And this is not right for you if you probably focus on just individual tax returns, or you serve solo practitioners or micro businesses like under 20 employees, because at that time just the scale is not there, right, to offer any sort of advisory services. And you're not involved in client bookkeeping, finance, and so on. I think that doesn't scale. And or if you're looking for like payroll or tax compliance solutions, right? So again, that's not there. So with that said, let's jump in, and we'll discuss a couple of things here. So first of all, when we think about this problem overall, like we call it the invisible work problem, whenever we talk to clients with or whom we are working already with the CAS firms, a typical theme is my team is spending hours every month chasing invoices, or asking client for approving the invoices at the month end, or we're spending a lot of time reclassifying invoices at the end of the month, right? Because the GLs are wrong, or the spend buckets doesn't make sense, it's assigned to a wrong class, or whatever the case might be. And all in all, what we call it is in like 3 or 4 buckets in where you start seeing these problems. Number one is chasing invoices. So pretty much you're asking your client all the time, "Hey, who approved this?" And or your client is asking, "Who approved this? Why I wasn't notified?" And there's always this surprise spend that is showing up all the time, right? So if you're dealing with surprise spend or expense reclassification, again, codes are wrong, cleanup takes hours, right? So every month you're just trying to do that, and the primary reason for that is there is no way for you to know where that client is spending money and what was the purpose of that, right? So if you bought some supplies, right, whether it should be office supplies or whether that was tied to a specific project, again, the person who actually made the purchase would know that. And that is where you have to always try to gather a lot of this information before you can create or submit an invoice. And that leads to month-end firefighting, right? So 3 days to close, and then you're just kind of running around trying to figure out, chasing stakeholders for finding that information. Now, if this is the problem, how do we quantify that? So that is what we're going to cover in the next slide. All right. So here, typically what we see, we recently did a survey. We asked our cash clients in terms of, okay, how much work you're actually absorbing from your client. And the answer was is 6 to 10 hours per client, right? So let's say you have 10 clients, you are, maybe doing 60 to 100 hours, right? Kind of deal. And this time is generally spent on reclassification of invoices. That is probably the number one reason. And second is they have a process where invoice needs to be approved before they can put it into the accounting system. And guess what? For that to happen, you have to get everything approved, unless you can't put it in the system. So that's where most of the time goes. Now, 40% of cash time is spent on tasks clients don't value, right? So in the sense that they're not paying you for that. You probably have like a monthly fee for offering basic bookkeeping services, but if you have to do additional the 6 to 10 hours of work, you're not getting paid for it. Again, $0 bill for it. And there's this opportunity which we will walk you through in terms of how you can take that unpaid work and fix the problem through using our framework and increase revenue per client by up to 3x. So we'll kind of get into more details on that one. Alrighty. So with that, I want to talk about why this problem happens to begin with, right? So if you look at today how you might be processing, and or especially this is very common in growing companies, right? You have probably QuickBooks that you're using for entering bills and paying, or you might have an AP automation tool. You have bill.com or other tools where you are entering the bills, getting it approved, and so on. And these are great tools. Of course, you need QuickBooks or any other tool to kind of run your books. The main issue is these are not designed for proactive spend control. So what it doesn't cover, it covers, yes, it shows you where do you spend the money, but only when you enter an invoice in the system. But if you really look at how you got there is a lot of back and forth that is going on before you actually got an invoice, right? So, for example, there is somebody who is deciding or making a decision on, do we need to make a purchase, right? So somebody in the business is identifying the need, which means then you go and put in a purchase request to say, hey, we need to buy this. Maybe you're going through a vendor selection process, and there you need to find the right vendors. Maybe the PO is getting created, or somebody's calling the vendor and say, hey, can you ship this product or service? And then finally, goods received and so on. The reason I'm trying to highlight this is the time when you get an invoice, you have all this information being captured in these individual steps. And the systems that your clients are using today are not designed to capture that, which means you have to find that information somehow. And that is where most of the work come from, right? So let's talk about a spend maturity model. So what we're going to do here is I'm going to now walk you through. So far, we just talked about, right, what is the problem? Now I'm going to give you a maturity model, which you can leverage to assess the maturity of your clients on where they are in the process. right? So let's jump right into it. All right. So it's 4 stages, and we'll cover each one of them and we'll provide details on how to kind of assess that, right? So the stage one is reactive, stage two is visible, stage three is controlled, and stage four it is advisory. So, I'm sure you guessed it that where you can kind of increase your revenue by offering advisory services is in towards stage three and stage four. So, what does it mean in each one of these stages? Stage one, which is reactive, we call it as firefighting. So invoices arrive as surprises. Maybe there are approvals happening before spend is actually, or the purchasing is actually done, or post purchasing. And cleanup is constant, cleaning up GL codes, reclassification, duplicate invoices, you name it, right? So that's kind of stage one. And this is probably true for if you do not have enough front control from a spending standpoint. So there's no pre authorization of spend. You would probably see all these, right? A lot of spending on credit cards and trying to reconcile those credit cards and so on. Second stage, which is visible, is where you're starting seeing the spend, right? So it's easy for you to kind of pull the data from a spend standpoint and have it in one single place. You can see where you're spending money, but you still don't have proactive control. Or maybe you have a purchase order process, but nobody's following it, right? So your clients might have a defined policy, but nobody follows it. Number three is control. So this is where you start seeing the efficiency from a process standpoint. So a control environment is where you have everything in defined as a process, all the way from somebody putting in a request for buying something, which is going for review and approval. It is getting coded upfront, which means somebody's saying, "Hey, what's the GL code for this?" and so on. And then invoice comes in and there's a matching of the invoice with the purchase order and the receipt or whatever the case might be. So you're basically following end-to-end process, and that means your team is not chasing people for approvals or asking, "Hey, what is this for?" or "where I should code this," right? Because all the information is already present in the system, and I'm going to walk you through how you set up this end-to-end process. Stage four, which is advisory, is where you act as a strategic partner to your client, where you kind of elevate from just doing basic financial controls, right, in terms of bookkeeping or in terms of helping them build their cash flow and so on. You move more into an advisor role, and advisor role is, "Hey, this is where you're spending money. How are you allocating your capital today, and where you should be spending money?" Or you're helping them identify better way to spend the money or opportunities for spend consolidation. Now, I'm going to walk you through step by step how to do that. So don't worry about how we will go and implement it. We have a whole playbook that you can leverage for this exact process. So with that, let's move and we'll now get into each one of these stages. So each one, we'll walk you through details, right? So stage one, reactive, I get invoices I didn't expect for spend I did not approve, right? So that is pretty common theme. If you're hearing it from your clients, they are in stage one, which is reactive. Couple of symptoms to look for. They have no purchase approval process. That means there is no defined policy that you need a purchase order. People can call the vendor, spend money on credit cards, and so on. And the process is pretty much post spending, right? So we get an invoice, we process it, and get it approved and paid. So you're kind of running month to month to understand exactly how much is committed till the time the invoice hits the books, right? Now, that number two is vendor spend is not just discovered at month end, but you also have your team chasing manual codes everywhere. So again, if you're spending a lot of time reaching out to your stakeholders or stakeholders in the client's organization, you are probably in the reactive mode. And of course, there is no clarity on audit trail, who approved, when it was approved. Again, these are symptoms. So what is your hidden cost? If you're serving a client who is more in a reactive mode, your hidden cost is one, you're probably spending, as I said, 6 hours per month per client. That is pretty consistent, is what we have heard from other, CAS companies. Second is high error rate in GL categorization. So the data is not categorized to the right categories or chart of accounts. Delayed close. Your close is probably 7 to 10 days ish, and billing wise, you're not getting billed anything extra for doing that work. You just have a fixed cost. So that is reactive. Number two is visible, right? So I can see what was spent, but only after it happens. Again, some of the signs or symptoms that your clients in stage two. You have basic reporting in maybe QuickBooks or spreadsheet. You can see exactly where money is going. Finance due is reviewing the spend monthly, right? But there is still maybe not systematic approval before purchase. Post approval, yes, you have in place. PO might exist in paper. This is again very common. PO is purchase order, so you might have a purchase order process, but nobody follows it. That's again a very common scenario for growing companies. And the data is visible or available, but not actionable. So let me kind of use an example to drive the point home. So if you have, for example, um, vendor, Staples, let's take that as example. Now you have maybe 50,000 purchased from Staples. So what did you actually buy? That information is not captured in the invoice, right? So you have the information on where you're spending money, but nobody actually put in the information in a way that you can run a report on. That means you got to go open each document, each invoice to figure out where exactly are we spending money? What are we actually buying, right? So the gap here is, where you're spending the time, most of the time, trying to kind of help them understand some of these things when they're asking these questions. But again, you're spending a lot of time figuring this information out on your own. Stage three is control. So here is where you start seeing, I would say, efficiency from a process standpoint. Typically at stage three, you have a purchase request process where their employees are putting in requests for whatever they want to buy. It goes through a approval workflow process. So it is defined in a way that their departments are reviewing the expense before they actually make the purchase. And typically, it is tied to budget visibility in terms of your ability to kind of see proactively that you're not going over the defined budget. So there is some sort of system check that is happening, which says, all right, do you even have the money before we move with this purchase? So that's happening automatically. And when the invoice comes in, you're matching it with receipts, you're matching it with purchase orders, and so on, right? That's kind of what we call control. Now, again, this also depends upon the nature of the organization, right? So if you are, let's say, a software company, you're probably not creating purchase orders for everything. You might just have invoices and credit cards showing up. But if you are into construction or into logistics, this entire process end to end becomes very important from a control standpoint. So, what changes for you as a firm? You see month end closing in 3 to 4 days, no surprise invoices, and compliance is automated. So, if you're supporting your client for compliance, this makes everything easy because now everything is in the system, right? So, that's controlled. Number four is advisory. That is where your margins is. That is where you move away from providing transactional support to more strategic approach. And this is what, in our opinion, makes the clients more stickier because they see you as a business partner and not just a transactional activity in terms of, hey, they're helping me manage my books. So what does that look for you, right? So you're offering spend strategy reviews, which means you're meeting your client every quarter and going at, hey, here's an opportunity where you might be able to save some money. Now, again, we kind of package all that for you in the product because we offer negotiated rates. You can just take that to your client. And let's say you're spending $100,000 on office supplies. We can easily save, 5 to 10 grand on that just by, I'm talking about one vendor. So those are the opportunities you want to talk about. Budget advisory, you can help them structure their budgets more effectively because now you have the data on where the spending is actually happening. And if you have a review and approval process, you can actually build more accurate budgets. Vendor management, in terms of helping them identify duplicate payments or duplicate vendors, help them even negotiate payment terms. So, let's say they just sign up with net 30, and if you can help them move from net 30 to next 60 with vendors, that is a one-time float advantage they have, right? So again, something to think about. And policy design, so setting up purchasing policies, so how they should buy, who should approve, at what level they should approve, you can help them design that. And finally, compliance readiness. So which comes along with that, that clients are always audit ready. So you're not scrambling last minute to provide more details, right? So that is 4 levels of maturity. And with that, it's time for a quick poll.
All right, right on time. I did see some questions regarding that in the Q&A. This is poll number 1 of 4. Go ahead and let us know now, where are most of your clients today on the spend control maturity model? Now, if this is your first time with us, you're going to respond to these polls by clicking the radio button. It's that circle icon to the left of each answer choice. Go ahead and click that radio button and then be sure to click submit. Oh, wow. I can see many of our attendees already on it. And I'm seeing the results spread pretty, not necessarily evenly of those who this is applicable in their work. It looks like almost an even split between stage 1 reactive and stage 3 control. Stage 2 takes a second place with that. And then finally, stage 4 advisory. I'll let that keep running in the background and I'll turn it back over to you, Sachin.
Yeah, awesome. No, it's kind of this is what we typically see, right? So stage 1 is where everybody starts, and as they scale, they will move to kind of stage 2 to stage 3. And if you already at stage 3, I think they might have the end-to-end process baked into like a accounting system and so on. But it's again very I would say human heavy in terms of they have 1 or 2 people who are actually managing the process for the entire company. So we'll kind of talk more about that. But no, great results. Alrighty. So again, I'll kind of give you very actionable information on what it looks like, who does what. So our intent with this presentation is to leave you with very specific details that you can take away rather than just talking about high level framework. I hope this is kind of landing so far. And keep your questions coming. We'll address all of them towards the end of this. So typically, what you would see in here is 6 steps process, right? Number 1 is purchase request. As I mentioned, employee submits requests through maybe a catalog or a spreadsheet, whatever the process is. This is your client requester doing that, right? So client doing this work. Approval workflow, where request is being routed for review and approval. Again, it's client doing that, right? So this is step 2 is again client. PO is generally you can automate generation of purchase orders and sending it out to the vendors through a system like ProcureDesk. So they are not doing this manually. And good receipt part is also done by the client. So they are going into a system and saying we have received the product. Now, this is where you're probably spending a lot of time today. Like even if you have a process which is at level 3 or stage 3, you probably have all this information sitting in another system, and now all of a sudden you have to figure out how do we do an effective 3-way match for between PO receipt and invoice. And that's where if you have everything in one single system, you will be able to automate the match pretty much. So your team is not actually spending time. You can in fact go to a level where you can help them automate the process. So rather than you looking at each and every invoice to see, oh, why this exception happened, I mean, in all honesty, you probably won't know, right? You're not involved in the day-to-day operations. So if you order something for $100, as an example, on the purchase order, and the invoice came for 120, you have no idea, right? Somebody in the client organization has to come in and say why the price increase. So you can set up process flows in a way that if there is an exception, it automatically goes to somebody in client's organization, whether it's procurement team or the buying team, whomsoever bought the product, so that they can go work with the vendor to identify why the price increase. So these are the things you need to think about from a process efficiency, because you can scale your practice without adding more headcount if you have all this process automated, right? And then finally, the invoice automatically syncs with all the details, including the copy of the invoice, the who audit trail, who signed it, and things like that. All that is in one single place. All right, so that's stage 3. Now, typically, what it looks like, this is what we see from working with our clients when they work with their end clients, right? So cash firms working with their clients. They probably have something like this. You have emails for approvals, spreadsheet for tracking invoices or purchase orders. You have a shared drive where you're storing the invoice, with multiple folders. I've seen very organized structures, like you have draft, you have pending approval, approved, created in ERP, and so on, right? You have paper, PDF purchase orders, bill.com or ramp for bill payment, expense app for tracking credit card expenses, vendor portals for receiving invoices, QuickBooks, Intag, whatever ERP accounting system they're using, or Slack threads, right? There are different systems that you're using today. And what we bring to the table from ProcureDesk standpoint is a single control layer that sits on top of your accounting system, right? So it does everything in one single place: purchase orders, approvals, three-way match, budget and real-time spending, bill pay and credit cards, and vendors and contracts. But it's just one seamless layer. So, with that, what changes for your firm, let's say on a Monday morning, right before after you start implementing this? So, really, I think on the left-hand side is some of the symptoms that you may or may not be seeing with your clients, like chasing approvers, reclassifying miscoded expenses, reconciling the mystery invoice. This is where we call like AP becoming detective and trying to figure out, trying to, I would say, trace out the trail of what might have happened with this invoice, like who purchased it and when it was purchased and so on, and trying to build the entire spend picture. Every time the client wants to know where the spending is happening, you're pulling data from multiple sources to build an accurate report. Of course, it is the data is in accounting system like QuickBooks, but a lot of times it's just the total amount, and you have to figure out exact details of where the money was spent, right? And your close is delayed, maybe 7 to 10 days or more, or 5 to 7 days. This is what you see after you have a proactive advisor with one dashboard, right? So see approvals as they happen. Coding is done upstream. Every invoice is a trail. You can just kind of read through it. I'm not going to cover each one of them, but that's what we see as typical results. All right. So, how do you identify clients who are ready for this kind of advisory service? So, before we go into like how do we build it, of course, we build a quick assessment for you, which we'll share towards the end. You can walk your clients through that. It's a 10 to 12 questionnaire, and you can just easily answer them on behalf of your client. They can answer for themselves, but that helps you identify whether they're ready or not. But these are some of the things, like 50 to 500 employees, multiple departments or locations making purchase, or they have 200 plus active vendors that they pay regularly, or month end close takes more than 3 days, 4 days, and you are currently absorbing a lot of their AP work, right? So those are some of the things I will look for to identify if a client is ready for some sort of advisory. Not ready, if they're under 20 employees, we generally don't see value of advisor services, because one is the spend is too low, and two is business owner might be making a lot of decisions themselves, so they need lightweight kind of accounting service, not really an advisory service. I'll kind of stay away from that. All right, so how do you package this, right? And we'll kind of give you some specific examples here in terms of what the pricing might look like and so on. So number one is what we call tier one. That's the foundation, right? This is probably what you're doing right now. Either it's hourly or a fixed fee, where you're doing the basic invoice processing, basic categorization, and so on. Tier two is control AP, where you're helping them set up a PO workflow setup, a three-way match automation, and approval management, and so on, with the intent of faster close cycle. Tier three is where you would start with vendor advisory, where you would do quarterly spend reviews, vendor consolidation, and so on, right? So helping them set up all these things. And again, you can charge different rates based on the different advisory services you might have. So here's an example to kind of walk through the math, right, real quick. So if you have an organization, let's say, this is a hypothetical example. Your monthly rates might be much higher than what I'm showing on the slides here. But let's say you have 10 clients, 250 monthly average. That's what you charge every client. It comes to around $30,000 a year revenue wise, right? I'm just kind of showing an example from a comparison standpoint. Now, if you start offering tier two, you can start with, let's say, $600 per month, because you're kind of helping them manage the process through a tool like ProcureDesk, right? So you kind of become the not just the layer for managing the invoices and all, but you're also advising them on here's where you need to create a PO, here's how to do it. So setting up the process, lightweight process, and kind of managing everything in the system, right? So that is around $600 per month. And then if you are really getting into the advisory services, this is kind of really tied to the value that you're delivering to the client, right? So this is, again, operational efficiency here when you are offering tier two in terms of close the books faster. I would say that's the outcome you're delivering. But in this advisory service, you're actually helping them save money. So it's not just about closing books faster. It's also about we are helping them reduce maybe 5 to 10% overall on the spend through better spend practices and so on. Now, here's an example of an existing client. They were charging 275 a month on, which was pretty low from our perspective, which comes down to around 16,500 for 5 clients per year. And they moved from 270 to 950, and kind of revenue increased from 16,500 to 57,000. So you can kind of see the price difference right here. So, time for a quick poll. Poll number 2: how many of your current clients could benefit from a spend control service based on the assessment I just kind of walk you through? I'm just curious to see. Jasmine, over to you.
Yeah, absolutely. We've got that second poll launched and live for everyone. If you are having trouble seeing that poll or getting it to respond, let me know over in the Q&A. I'll let this run for about a minute as always. I do appreciate everyone getting those responses in as quickly as they can. And it looks like, of course, the responses are still coming in, still recalculating, but it looks like almost a tie here between 1 to 2 and then 3 to 5. I'll let that keep rolling and give it back over to you.
Awesome. So I think that's definitely, when you're kind of thinking about your clients, what I would strongly advise is push all your clients through a quick survey to kind of understand more in terms of the volume and where the opportunity might be. And also, this aligns with also how we advise you to kind of build this practice, right? You don't want to go to all your clients and do this, but you want to build it with one client at a time. So we'll kind of give you specific step-by-step process. So what I'm going to do next is I just want to quickly spend maybe 5-10 minutes walking you through what it looks like in real life, like an end-to-end process, right? So if you build in a process using something like ProcureDesk, what to expect, right? So what you're basically seeing here is, and I'll quickly show my screen and walk you through the product itself, but at a very high level, you have this entire process built in, right? So a purchase request process for employees to submit the request, an approval process for them to approve based on dollar amount, category, department, you name it. A 3-way match process where the system is actually matching the invoices for you, a budget tracking to understand where people are actually spending the money, and of course, ERP integration, and so on. We'll talk about all that. With that, I am going to share my screen real quick. All right. Can you see my screen? Just to want to make sure. Yes, you can see it. All right. Perfect. So I have limited time, so I'm not going to kind of do a full walkthrough, but certainly want to walk you through real quick. So imagine a system where your clients' employees are coming in and putting a request for whatever they want to purchase, right? So let's say they want to purchase something from Amazon, and they just quickly put in the information on what they're looking to buy. It then gets routed to the right person for approval, and you're doing real-time budget checks to make sure that you're not going over budget, right? There's a proactive check to make sure it stays under budget, right? Now, once the request is approved, of course, all the approvals can be tracked by approvers real quick here, right? So when an approver tries to approve something, they can see what the information is presented to them, why you're approving it, and so on. And they can approve it using email, phones, whatever the case might be, right? Once the request gets reviewed and approved, system generates the purchase order and send it out to the vendor, right? So here is an example of a purchase order, and then you can just see all the information here, all the details on where it is built and things like that. So that's kind of the upfront process of requisitions, purchase orders, and so on. So what that means is when you have invoices coming in, so this is now I'll specifically talk about if you are today using like a bill pay system, you're probably processing invoices in the way that when an invoice comes in, right, you are entering that information into the system, which is then needs to be reviewed and approved. So the difference in the process here is we'll import all your invoices, right? If your client already have a email address from where they're receiving vendor invoices, we can pull that automatically. We have OCR and AI built into this, so you don't have to worry about even entering the information. And once the information is entered by the system, it does matching also. So let's look at some examples. So here is what we call three-way match. So here's a sample invoice, what you're looking at on your screen from Amazon, and the system has raised an exception. So if you recall, what I was saying at level 3 or stage 3 was that you have controls built in which routes the information back to the person for review and approval. You're not the one chasing people for approval. The system is doing it for you. But let's kind of break down, it's like why even this information came here, right? So it's saying, hey, you ordered one monitor, received it, invoiced, but the price doesn't match. The PO had 74.99, invoice has 89.97. So this is what we call as price exception. Now, when the price exception happens, it automatically routes to the right person. You don't even need to worry about it. What that means is we'll keep the invoice here in ProcureDesk till the time it's not approved, right? It's not ready for payment. And then once it is paid, it will automatically sync with your accounting system, right? Whatever accounting system your client is using. So that's kind of the invoice process. We also have bill pay built into the system here, where you can actually, pay the bills, right? All you got to do is just create a payment batch, and then we'll have a payment system behind the scene. Where the payment batch is approved, it gets paid automatically. And we also have credit cards and everything else built into this. But let's talk about briefly in terms of how everything comes together, right? So number one is we talked about moving to like stage 4, which is advisory service. This is where you're closely looking at at their spending, right? What was the budget? Where are they spending money? And like, for example, now we can get into details and say, oh, this was office supplies budget. Okay, who purchased it, when it was purchased, all that information now is in one single place. So it's easy to understand sitting with the client to say, okay, where are we spending money and how this can be done better, right? That's one way I will look at it. The second is you help them understand a couple of things, which I'll kind of walk you through real quick. One is the ability for them to kind of see where they're spending money, right? So where the money is being spent, with whom it is being spent, who is actually spending the money, right? And where the cost is booked from a GL standpoint. Maybe you want to help them understand how are they spending money month over month, right? Are there any spikes you're seeing? And maybe there's a reason for that, but it helps from a cash flow management standpoint, right? How are their payment terms structured? So, for example, if everything is in net 30, can we move them to net 60? That's an opportunity for increasing the cash flow. Or which departments are spending the money? What's the overall budget looks like, or utilization of budget, and so on. Or maybe you want to help them, understand where they are avoiding cost. So, cost avoidance comes from if you have a requisition process, and if you don't need to buy something, right, you can just stop the purchase from happening. So this is where somebody going in and saying, we don't need to buy this because we already have it in place. Or you want to help them with, oops, all right, we want to help them with building a cash flow. So what the system also does is it looks at the past history. It looks at committed spend. So if you have a purchase order in the system, we can forecast the future milestones from a payment standpoint and help you build a cash flow forecast as well, right? So that's kind of a high level overview of how you can kind of use the system to, one, help them control the process, right? The requisitions, the purchase orders, approvals in one place. And then from a AP standpoint, this is where you get involved, where you are using the technology to automate a lot of the process around managing invoices. What that means is, since the system is doing most of the work, you can handle more clients with the same headcount. So even if you don't want to get into advisory services, and if you just want to improve the efficiency of your organization, this is the opportunity to do that. So with that, I am going to jump back to my presentation. All right. So this was a quick walkthrough. Hope this was helpful. Now let's talk about your 90-day roadmap. So you might say, Sachin, all this looks great. How we actually implement that within our organization? So this is where I would kind of plot a 90-day plan. Number one is we'll kind of do focus assessment, right? So this is where many of you said we have 1 to 2 clients who can fit, might fit the bill for advisory service. That's exactly what we suggest. You look for 1 to 2 clients with clear stage 1 to 2 symptoms. You help them run a spend control assessment, for which we have included the template within here. And then you present the maturity model to the client and say, here's where you are, and here's how you can go to the next level. These are the opportunities for you to move to like stage 3 or stage 4. Day 31 and 60 is, we can help to set up all this in ProcureDesk. So there's no need for you to worry about how I'm going to set all this up. We'll take care of everything for you. And we'll talk more about that in details. But you're configuring approval workflow with client inputs in terms of how they want to control spending. And we'll train the client staff on purchase request process and run kind of, if you really want to do this, sometimes we advise it based on some clients really want to benchmark the time they were spending before and after. So this is where you will kind of run old and new to baseline or benchmark their timelines. And then you formalize the offer. So once you have gone through cycle, I would say day 1 to 60, and you implemented it 1 or 2 clients, you have a better way to package that advisor service, right? We have given you some like starting points, but you could use that to kind of go and say, hey, document save time versus previous process. You want to build some case studies that you can take to other clients. This is super helpful, right? You can build some sort of ROI summary, which is more customized to how you kind of work with your clients, and then you formalize the service and the pricing based on the value you're delivering, and then you roll it out to your next 2 to 3 clients. So really think about it this process. Start with 1 to 2, implement it, take the learnings from here, formalize the offering, and then roll it out to all your clients who kind of fit the bill. So with that, I'll turn over to Jasmine for poll number 3. What's your biggest challenge in offering spend advisory to clients?
Yes, that third poll has been launched. It's live for everyone right now. This is poll 3 of 4. There is one remaining in our time today, and I am seeing lots of responses coming in quickly. I'm just waiting a few more moments for those to populate a clear winner if we have one. And it looks like between time and client buy-in, that's got the biggest proportion of responses so far. I'll let that keep running in the background and turn it back over to you, Sachin.
Thank you, Jasmine. And that kind of makes sense, right? I mean, you know, either clients are not ready for it or they don't see the value. And I think that's where a little bit of education also helps, right? So, all right. So then let me address it directly, right? Some of the hesitations which you might, either you have it or your clients have it. So my clients won't pay me more. I think they are kind of already paying you, just absorbing the cost, right? You're just not charging them. And so a lot of times it'll be just highlighting how much backend work it is creating for you because they don't have a process. I think that in our experience works a long way in terms of like walking the client through and say, hey, this is what we're doing for you. This is average time what it takes to process the invoice. So when you come to me and just say, hey, we can't pay our vendors on time, that's exactly the reason we can't, because you don't have a process. So there is a cost anyway. They're paying it somewhere, whether it is delayed payments to vendors and they're paying interest on late payment charges, right? Or they're not getting the product on time because a vendor was not paid, and then you get blamed because you're managing the books. Or we don't have bandwidth to implement, right? So again, we hear this all the time, but we will take care of all the implementation for your clients. So if you decide to implement ProcureDesk for your client, we basically do everything soup to nuts in terms of even working with them, understanding the process, training their team, and so on. So really, all they need to do is show up for training. They're already using Bill.com or Samply, Ramp, and so on, or any other AP solution. We work very well with all these tools, but we are designed differently. ProcureDesk is not another AP tool. We are designed for spend control with AP as a part of it, right? So it works very well for clients where they actually need to, or they're struggling with spend control. If it's like, okay, I don't care about spend control and all I need is my invoice process and pay the vendors whenever we can, then that one, they're not a right client for advisory services, and 2 is they're not a right fit for something like ProcureDesk. What if my client pushes back on adding another tool? Honestly, in our experience, we actually consolidate all these tools into a single tool. right? So rather than having one for expenses, one for budgeting, one for invoices, one for purchase requests, we bring it all together, and all it's a single platform that sits on top of the accounting system. So we are in fact sometimes consolidating rather than adding. So those are some of the things you might see and how to address that. So how do you take it back to your practice today? Number one is understand that AP automation only solves the downstream problem. The opportunity is controlling spend and being more efficient with capital allocation. And that can only happen if you have proactive spend control. The spend control maturity model is the diagnostic tool that you're leveraging, right? So leverage that to understand, which client might be helpful or where we can help. Number three is again, you're probably most cash firms are doing stage 1 or 2 work without charging for it. So it's not that it's just magically getting processed. You're spending time chasing your stakeholders and so on, which you can make the whole process more efficient. And you don't need to rebuild the practice. Really, what you need to do test the waters is take 1 or 2 clients and then roll it out over a period of time, right? So this is where we kind of put together the free spend control assessment. Here's a link. You can, and I think it's also on our site. Again, take top 3 clients, and then again identify which clients are ready for spend control. Show them the process. Kind of go from there. And then we also have. I just want to kind of highlight. We also have a special plan for our what we call our advisory partners. So if you want to be a ProcureDesk partner, what that offers is we have these couple of incentives there, right? So we have a rev share plan where we share this with our partners. We offer specialized pricing for your clients. We provide code delivery support, so we are the one actually doing the work for you. So we set it off with no additional charge to you, and it is done for you, right? So we'll kind of take care of everything that is required, and we'll have a dedicated training for your team in terms of how you can leverage and present this to your clients. So all that is kind of part of, if you are interested in becoming or evaluating with what partnership with ProcureDesk looks like, you can click on this link and book some time to talk to our partner manager. So with that, I'm going to jump to Q&A. And Jasmine, it looks like there's another poll you want to have.
Yes, I'll go ahead and get that fourth and final poll launched. You guys can go ahead and get your responses in as quickly as possible, but we'll definitely turn our attention now to Q&A. Sachin, are you seeing the responses over in the Q&A panel, or would you prefer that I read those out for you?
If you don't mind reading out, there's a lot here.
Yeah, no worries. Okay, so it looks like question here from Leilani. Hopefully I pronounced your name correctly. Wanting to know, can the system, ProcureDesk, report the interest rate payments which has been incurred for the month?
Okay, so I'm assuming here that you're probably talking about interest that you're paying on late payments, or there might be any sort of interest that you're paying out. So one is we have an aging dashboard which kind of projects all that out, including what interest you might be paying because of late payment charges. So we can identify that. Or second is if there is any sort of breakup which you want to capture on an invoice, you can simply run a report and do that as well.
Awesome. Okay, let's see. Another one here. This one came in from John. How do I start the conversion with a client who's resistant to changing their current AP process? They've been doing it the same way for many years.
That's a great question. I think you can show them the way, right? As they say, like you can take the horse to the water, you can't make it drink. And I think it's the same way, right? So what you can do is a couple of things. One is you can use the assessment to identify the gaps and educate them on what these gaps means. So if you are, seeing like what the way I look at this is, what is the impact on the operations, day-to-day operations, because of the way we are running the business today? So it's not just about efficiently processing invoices, but can we understand, are we spending more time closing books because we're just chasing invoices, or are we spending more time figuring out why the spend is different this month, right? Like, what are the trends from a spending standpoint? Revenue went up, expenses went up. What exactly happened? Are we spending enough time? Number two is it does have impact on your day-to-day operations. So where you typically see this is vendors trying to increase your pricing because you pay the invoices late, right? Or vendors won't ship the product till the time they receive payment, or you're dealing with a lot of firefighting in the operations. Product not showing up, like we see a lot with construction clients, where the crew is on the field, they want something now. They call the vendor and say, "Hey, I have a unpaid invoice. Till the time it's not paid, you're hit your credit limit. We can't issue you more product."
Mm.
And guess what? Now you're sitting on the field, you can't complete the work, you're wasting time of your crew, and your customer is going to pay you late because you finished the job late, right? So those are, I would just say, those are a couple of aspects you can think about to assess the impact of the current, operation or how they do things, and let them take a call.
Awesome. Okay. And there are definitely so many. Let me see. Oh, this one here from Sharon. We already have the clients that use bill.com or ramp. How do we explain why they need ProcureDesk? Oh, on top of that, without it feeling like we're adding complexity.
Sure. Yeah, that's a great question. So we see this very common. Like, clients come to us, they're already using bill.com or RAM for bill pay or cards and so on. So there are a couple of ways to think about this problem, right? And it's a great question, is that do you really need another solution? So the major difference here is the approach to spend management. So is a client looking to control spending, or is the client looking to improve the efficiency of how do we process the invoices faster? So if you're looking for spend control, then by the time the bill hits bill.com, you're obliged to pay it, right? You can argue about it, but the spend has already happened. So what is your opportunity to control the spending and say, do we really need to spend this money now? And that is the main difference, right, from an approach standpoint. So the first thing to assess is, like, what is the main objective? What is the end goal? Start with the goal, right, and work backwards. If the goal is spend control, you need a additional system which sits before bill pay so that it can control the spending and so on, right? And second is also from a credit card standpoint, one of the things which we see is, if you have a lot of credit card spending happening, right, somebody got to reconcile that expense. And that lands up to either employees or the accounting team that's handling it. So somebody's doing the work. But if you move to a more proactive control and have more terms with the vendors, like net 30, net 60, it impacts your cash flow, right? Because you have like a better way to predict when you need to pay somebody. And second is, it just minimize the impact of this whole process on the entire organization. So sometimes it's not just about how do we process something fast, but what's the impact of the process on the entire organization, and can we kind of spend enough time on it to optimize the end-to-end process? Hope that's helpful. Jasmine, over to you. If there are any other questions.
Oh, yes, absolutely. Sorry about that. I was on mute. If you definitely need any further insights regarding that question, feel free to submit it in the Q&A. And we do just have just a few moments here. I'll try to just get one more question. This one is from John. For firms just getting started with CAS, should we be pitching spend advisory to existing clients first? Or is it better positioned as a differentiator when onboarding new ones?
So I would certainly structure it in two ways, right? Number one is, I'll work with existing clients, maybe one or two, to kind of build a case study, right? So I probably won't go and talk to every client about advisory services. And even if you are starting from there, I think I would start with stage 3, which is helping them set up the process, because it needs a little bit of discipline to build this practice. So going from stage 3 to stage 4, you're elevating the expertise of the organization. Stage 3 is all about just setting the core process, helping them do end-to-end process in one place. Stage 4 is elevating the skills of your team. right? So looking at data in ProcureDesk and say, all right, I'm seeing these patterns where there are multiple vendors from the same purchase. You might want to consolidate that. So start with stage three, then move to stage four. That's kind of step number one. And second is, I would just build a case study with one or two clients and build an internal checklist that I'll put it in my onboarding process. So if you are onboarding a new client, I should have a checklist for, are they ready for CAS advisory service? Which is pretty much what you do is you take our questionnaire, which we have offered in the template, put it in your checklist, let them answer that, have a rating available, and that way you can quickly decide whether to talk to the client or not, right, regarding CAS advisory services. Hope that's helpful.
Awesome. I definitely think so, and appreciate you taking the time to address so many of those questions that came in the Q&A. As I mentioned earlier, if you still have any unanswered questions, you've got that contact information right up there on screen, and I'll be sure to share all those with the ProcureDesk team in a full report. And with that, we have come to the conclusion of today's webinar. We here at CPA Academy will go ahead and process your CPE credit. You should have access to the archive recording, your course evaluation survey, and your CP certificate within 24 to 48 business hours. We do encourage you to also check your email inbox because we should have just sent you a link to your course evaluation survey via email as well. And we hope that you'll take the time to fill that out while the experience is fresh. That is the best way to ensure there's no delays with your CPE issuance. Again, thank you so much for attending, and we are hoping to see you all very soon on a future webinar. But for now, take care and enjoy the rest of your day. Thanks again, Sachin.
Thank you all. I appreciate it.